Welcome to HouseLux Estate, your reliable source for real estate and financial insights. We're here to provide you with expert advice, practical strategies, and innovative solutions to help you navigate the complex world of real estate and finance. At HouseLux Estate, we believe that knowledge is power, and we're committed to empowering you with the tools and information you need to make informed decisions. Today, we delve into the realm of corporate finance, with a focus on a topic that is often overlooked, yet holds the potential to save your company a significant amount of money: maximizing corporate tax deductions. For corporate executives, understanding the nuances of tax deductions can be a game changer. It can transform your company's financial health and boost its bottom line. So, let's embark on this journey of financial discovery together and demystify the process of maximizing corporate tax deductions. Stay tuned to learn the steps to maximize your corporate tax deductions and save your company some significant money. Before diving into how to maximize corporate tax deductions, it's essential to understand what they are. Corporate tax deductions, in the simplest of terms, are expenses that a company can subtract from its taxable income. Think of them as the silver linings in the cloud of running a business. They help to reduce the overall tax burden, leaving more profit in your company's pocket. So how does this work? Well, every time your company spends money on business-related expenses, it's like a gift that keeps on giving. These expenses can include anything from office supplies to employee salaries, and even the rent for your office space. When tax season rolls around, these costs are deducted from your company's gross income, thereby reducing the amount of taxable income. Here's an example to make it clearer. Let's say your company made $1 million this year. Now, if you had business expenses amounting to $200,000, you would subtract this from your gross income. So instead of paying tax on $1 million, you're now only taxed on $800,000. But remember, not all expenses qualify as tax deductions. To be deductible, an expense must be both ordinary and necessary. An ordinary expense is one that is common and accepted in your trade or business, while a necessary expense is one that is helpful and appropriate for your business. It's also important to note that corporate tax deductions vary from country to country and even from state to state. Therefore, it's crucial to be well versed with your local tax laws or have a reliable tax advisor on your team. So, in essence, corporate tax deductions are not just about reducing your tax bill. They're about strategically managing your business expenses to maximize profitability. They're a crucial tool in your financial arsenal, helping to ensure the long-term sustainability and growth of your company. Now that we have a grasp on what corporate tax deductions are, it's time to learn how to maximize them. It's crucial to consider several factors when planning to maximize your corporate tax deductions. First, let's talk about the size of your company. If you're running a small business, the tax deductions you can claim may differ significantly from those of a large corporation. For instance, small businesses often have the advantage of being able to write off certain startup costs or home office expenses that larger corporations cannot. Next, consider your industry. Different sectors come with unique tax incentives. For instance, if you're in the research and development sector, the government often offers tax credits to encourage innovation. Conversely, if your company operates in the manufacturing industry, you might be eligible for deductions on capital expenses for machinery or equipment. Your company's location is another crucial factor. Different regions, states, and even cities offer various tax incentives to attract businesses. These can range from deductions for job creation to incentives for investing in certain areas or industries. Therefore, it's worth doing some research to understand what's available in your specific location. Furthermore, the structure of your business, whether it's a sole proprietorship, partnership, or corporation, can significantly influence the tax deductions you can claim. Each of these business structures has different tax implications, and understanding these can help you to optimize your tax deductions. Your company's financial situation is another key aspect to consider. If your business is in a growth phase, you might be reinvesting profits back into the company, which can impact the deductions you're eligible for. Conversely, if your company is in a more stable phase, different deductions may be more applicable. Finally, consider your company's strategic plans. If you plan to expand or invest in new equipment, there may be tax incentives available that align with these plans. It's about making smart decisions that benefit both your business strategy and your tax position. With these factors in mind, we can now move on to the specific steps to maximize your deductions. Maximizing corporate tax deductions involves strategic planning and careful consideration. It's not about finding loopholes, but rather understanding the tax code and applying it effectively to your business operations. Let's break this down into easy-to-follow steps. First and foremost, keep accurate and detailed records. This is the backbone of any successful tax strategy. Every transaction, no matter how small, could potentially have tax implications. So it's crucial to document all income and expenses meticulously. This not only helps in identifying all possible deductions, but also serves as a defense in case of an audit. Secondly, identify all possible deductions. The tax code provides numerous deductions for corporations, from employee salaries and benefits to office supplies, travel expenses, and even depreciation on assets. It's essential to explore every avenue and leave no stone unturned. Regularly review your expenses and align them with the appropriate deductions. The more you understand about what can be deducted, the more you can maximize your tax savings. Next, consider the timing of income and expenses. The tax code allows corporations to use the accrual method of accounting, which means you can time your income and expenses to your advantage. For example, if you expect to be in a higher tax bracket next year, it might make sense to delay billing until then. Conversely, if you anticipate being in a lower tax bracket, consider accelerating your income into the current year. Additionally, make use of tax credits. These are a dollar-for-dollar reduction in your tax bill and are often more valuable than deductions. The government offers numerous tax credits for corporations, including those for research and development, energy efficiency, and hiring certain groups of employees. Fourthly, consult with a tax professional. The tax code is complex and constantly changing. It's virtually impossible for a business owner to stay on top of all the latest developments. A tax advisor can provide expert guidance, help you develop a tax strategy, and ensure you're taking advantage of all possible deductions and credits. Finally, be proactive. Don't wait until the end of the year to think about your taxes. Tax planning should be an ongoing process, integrated into your overall business strategy. Regularly review your financial situation, make adjustments as needed, and always keep an eye on future tax implications. These steps provide a roadmap to maximizing your corporate tax deductions. But remember, every company's situation is unique. What works for one business may not work for another. It's important to tailor your tax strategy to your specific circumstances and objectives. And as always, when in doubt, consult with a tax professional. Let's recap what we've discussed today. We've embarked on a journey of understanding corporate tax deductions, their nuances, and the key strategies to maximize them. We started by demystifying the concept of corporate tax deductions. We explored how they are not merely reductions in tax liability, but crucial financial tools that can significantly boost a company's bottom line. We discovered that understanding these deductions is not just about knowing the tax code, but also about recognizing the unique financial landscape of your corporation. Next, we examined the key factors to consider when navigating the world of corporate tax deductions. From the importance of meticulous record-keeping to the critical role of professional tax advice, we underscored the multifaceted approach required to truly optimize these deductions. We also discussed the importance of staying updated with tax laws, as they are often subject to change, which can open up new opportunities for deductions. Then we delved into the practical steps to maximize corporate tax deductions. We talked about how to identify deductible expenses, from the obvious ones like rent and salaries, to the less apparent ones like business-related travel and home office expenses. We also emphasized on the need to strategize around timing of deductions, capitalizing on tax credits, and the importance of proper documentation. In essence, maximizing corporate tax deductions is a complex yet rewarding process. It requires a keen understanding of the tax landscape, a strategic approach to planning, and an unwavering commitment to meticulous record-keeping. It's not a one-size-fits-all solution, but a tailored strategy that aligns with your corporation's unique financial goals. As we conclude, remember that while this journey may seem daunting, you're not alone. Professional tax advisors can provide invaluable assistance, ensuring that you are not just compliant with tax laws, but also maximizing your potential savings. Thank you for joining us at HouseLux Estate. Don't forget to subscribe for more financial and real estate insights. Until next time, happy tax planning.